Now, for more on the U.S. economy, let's talk to Chris Christopher. He's Executive Director of U.S. Macro and Global Economic Services at IHS Markit. Welcome to the show.
Pleasant being here.
Now, as we saw, the unemployment picture seemed pretty rosy, and then August jobs numbers missed the mark and unemployment ticked up to 4.4%. What happened?
Well, the August numbers are always a little funny. Of all the months, the 12 months we have in the year, the one they have to be a little bit careful of, and it can get revised in many different directions, in many different ways, is the August one. So since the Hurricane Harvey is not in this payroll period for August, I think we can sort of discount it, and it's our opinion that the Fed will discount it. Of course, when September comes rolling around, we do expect some job losses because of the hurricane.
So then, you're saying that we shouldn't really read too much into this, and you don't think that it's going to affect any of the pace of the Federal Reserve's interest rate hikes?
No, not at this point. And we don't even think the hurricane should have that much of an impact on the Fed's decision. What the Fed will be looking out for will be if the debt ceiling crisis kind of sort of reappears, and that might slow things down. So we think in September they're going to sort of do some tightening, and then we also think if everything goes according to plan, that they'll have a rate hike in December.
So then what do you think are some of the strengths and weaknesses that we should be looking at in what's happening overall in the U.S. labor market?
Well, in the labor market and a few other indicators, headline indicators, they're going to, for the next couple of months, they're going to be moving up and down because of the hurricane. The one place where there's some concern from the Fed is in core inflation or, consumer prices. Of course, gasoline prices are going to come up a bit, and then they're going to, then they're going to settle down again because of the hurricane. But where some Fed officials are a little bit nervous is that consumer prices are a little bit low, especially for durable and non-durable goods.
Now, we did see that second quarter GDP was revised upwards to 3%. What are some of the key takeaways from that data?
Well, that basically says that the U.S. economy is doing pretty well. Of course, the consumer is doing a lot of the heavy lifting, but a lot of the numbers are much stronger. Some of the hard numbers, especially in the second quarter, but a lot of the softer numbers, consumer confidence, small business optimism, ISM manufacturing. Of course, next month it might be a little bit of a different situation, especially on the softer numbers.
Now let's also look at expectations for the NAFTA trade deal renegotiations between the U.S., Canada, and Mexico. What are businesses in the three countries trying to glean from this round of talks? Well,
they're trying to ascertain where things are headed. It is our opinion that when all said and done, there will be some fine-tuning. It will probably favor the United States. But when push comes to shove, you can't just tear up the NAFTA agreement. We do export a lot, to Mexico, and Mexico also needs to import a lot from us and export for their own good. So businesses on a whole probably prefer the NAFTA agreement to be as it is, but to sort of fine-tune a few things.
So then, playing devil's advocate, since President Trump has said that he has threatened to rip up NAFTA, how much could the outcome of these talks affect the U.S. labor picture?
It can impact the labor picture, and we think it's a mistake if we go into a protectionist sort of mode in the United States. That could cause some harm to the economy. Now, we don't think it's going to go in that direction, and we do think that Congress, with the White House, will actually get some tax cuts through and a little stimulus spending for next year, so that should help out as well.
All right, thank you so much. We'll have to leave it there. Chris Christopher, Executive Director of U.S. Macro and Global Economic Services at IHS Markit.